Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, you got the 9-day here is your blue line. The 50-day held it day before yesterday. The bears have let them bounce it. They let them get through the daily mid-band. They let them get up into the area of the 9-day and up into the area of weekly pivot. So the bears are really on the edge of just giving it up again and doing their usual, basically their usual implosion. You can see down here from Monday, 42.24, the pre-FOMC price, the 50-day monthly pivot, that 24 to 38 area was where they battled for a few hours. But once they gave it up, it's been higher lows and higher highs ever since. Now, we talked about whether or not the bears were going to be able to hold this overnight, this Globex resistance that had developed in the 42.75, 42.78 area. They took it down 52.75 off the open yesterday, and then they gave it up. So yesterday was a trend up day. We ended up long in 66 area, 65 area. We got long again when it converted our upper level around 85, and we just let those runners work for the majority of the day. There was nothing else to really do. The bears never showed up. They never showed up. They tried a little bit here, but ultimately they never showed up enough for a trade. Overnight, hourly mid, stays support, little dip below. This is a test. The green line here is your daily mid band, your 20-day. Test of that held. Now, you see up here, here's the critical area. You got the weekly pivot 39, 9-day at 36. Your overnight high is 38.5. So these two areas are going to determine whether or not we get moves higher, back up to where we were trading late last week. 43.68 needs a look from Friday, or whether the bears are going to hold this in. So look, going from 42.24 up to 43.38 is pretty ugly, but ultimately if it's a down market, there's going to be rallies, and those rallies are going to get ultimately sold. Now, I think that's a low probability outcome based upon how the tape is acting and how the bears act historically, but it's still on the table. If the 20-day holds here, as you see, and it gets up over the top of weekly pivot and over the top of the 9-day, like I said, then it has a chance to really get through. So if you're the bears, you want to hold here, you want to convert the 20, you want to stay below the hourly mid band, you want to get back down to the roundy there at 4,300, which is basically the daily pivot for today, and close with something with a 42 on the front of it. If you're the bulls, you want to hold serve there at the 20-day at the green line, make a higher high, convert weekly pivot, and close above the weekly pivot today. Door number 3 is we battle between 4,300 to 4,310 to 4,340 all day long, and the market kind of takes a break. I still think it's due for a rest. And this little area here, if this doesn't want to give it up, is prime time for a consolidation area. So shorter term levels, volume weighted average price is basically 24, 5-minute mid band 23, hourly mid is 21.66 essentially. Our proprietary moving average is 28.5. So I'll be very interested to see where we are relative to both the 20-day and the 9-day as we get through the balance of the day. There's a real opportunity for that to become basically a trading range for the day, and we'll see. And you definitely want to be short a breakout below that area and long a breakout above it, because either one of them can run. But that might be for tomorrow. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.